Okay, good evening from wherever you are listening to me or you are getting me. My name is Fanvi Kwanami or CK, so that's my name, and I've been doing this thing for a while. For even the first time joining my session, can you take time and probably listen to me, take the good things and the bad things, just leave it. Are we together? So, trading is not simple and it's not easy. It just needs your time. Like I normally say, from wherever I'm coming from, country Kenya, uh, we normally say that, for example, if you're dating and you don't talk to your guy or your person for 2 weeks, that means you're not together. Is it so? So just like trading, if you can stay 2 weeks without learning, that means you're not together with trading. Are we together? Now, let me give you a breakdown on what you need to learn. Number one, the trend, how the market moves. Number two, the market structure. Number three, the liquidity. Number four, the combination between the liquidity and the market structure. Number five, patience, discipline, and MT5. Are we together? I'll repeat again what you need to learn. Number one, the trend of the market. Number two, the market structure. Number three, liquidity. Number four, combining liquidity and the market structure. Number five, MT5. Yeah, just like that, how to use it. A discipline like that. So the basic things are four. One, trend, market structure, liquidity, combining liquidity and the market structure. Are we together? So that is the basic thing that you need to learn. So number one, what is the trend? In the market, we have three types of trend. Trend number one is an uptrend. Are we together? So this is an uptrend. Even a toddler can understand this is an uptrend. The market is coming from down to upside. Are we together? So number two, we have downtrend. This is a downtrend. That means the market is coming from upside to downside. Are we together? Number three, we have a wavy, consolidating, or choppy market. It's not showing you upwards, downwards, or it's just moving like that. So on a chart representation, this is a downtrend market. Are we together? This shows a downtrend market. Are we together? And this one is an uptrend market. Here, this is an uptrend market. Are we together? Then, in a comparison to that, this one is a consolidating market. Here, the word I've drawn here, this is a consolidating market. Why am I saying consolidating? You cannot define between ups and downs, like it's just like that. As you can see, a lot of candles, they're consolidating, they're scattered. If you did some geography or some social studies in school, you can recall the densely populated place. So these are places where we have densely populated of candlestick together. Are we together? Now, this is an uptrend market and this one is a downtrend market. Are we together? I hope that you have understand and you can go and learn more about that. Number two, we go to the market structure. But before going to the market structure, we need to understand why is this a downtrend and this an uptrend. Are we together? So this is an uptrend because we have the highs and the lows. Are we together? So these ones, the down here, this is the low, this is the low, there is another low. It's forming like a stairs on a market. Simple. This is just like a stairs. Are we together? This is like a stairs and this market is respecting the lows and is breaking the highs. So this is a true representation of an uptrend. Are we together? So what about the downtrend? So the downtrend, the market moves from the upside towards downside. So this is respecting what? It is respecting the highs and breaking the lows. Are we together? This is a presentation of a downtrend. So if you have grasped that, you are good to go. So my question is, this is an uptrend. Are you seeing this one? This is an uptrend. But the question of the day is, why am I seeing some buy small sells there? under this downtrend. Why am I seeing some small sets? The question is, why are you seeing these small sells yet this is a buying market? Reason number one is this market is an uptrend. Yes, that's right. Number two, why am I seeing some small sells in this market? These small sells, they're against the trend. Are we together? They're normally called retracement or correction. Are we together? This is a retracement or correction. They are against the trend. Are we together? But when the trend is moving from upside to, from downside to upside, that is an uptrend. The highs are being respected. No, the lows are being respected while the highs are being violated. So the small buys in an uptrend, they're called correction or impulse. So these places that are called the highs, if you can see at this place here, if you can draw this place here, these are the highs, low, high, low, high, low. Are we together? So whenever the market breaks the high, whenever it breaks the high, that's what we call market structure. So it's called break of structure. Are we together? If the market breaks the, let me draw on a separate, on a plain chart like this one. So this is a downtrend. Under downtrend, we have something like this one. Under downtrend, we have some small cells. Are we together? Hope you're together. We have some small cells and buys. Like this one. Why is this thing moving? We have some small cells and buys. So what I'm trying to mean here is the cells in a selling market, it's a impulse, while the buys in a selling market is a retracement. Hope we are together. So we have some things like this on a downtrend. Hope you are seeing this on your chart. So I want to go further about that. So after knowing that, these are the highs, low, high, low, high, low, high, low. So you can learn more about that at your free time. So if the market breaks this point, that's how the market structure is. It's breaking that and respecting such kind of things. So the highs and the lows are being respected and violated respectively, as you can learn from that. Now, after knowing that, if it breaks, for example, if it breaks the low, that means the market is breaking the structure. Are we together? So that's how the market structure is in combination with the trend. Now let us go to the liquidity. Number two, that's number three, liquidity. If you are buying this market, let me pick this point here. You are buying this market, this is an uptrend. Are we together? So that means if you want to trade this chart, you'll be buying from where? You'll be buying from this low to this high. Are we together? So where will be your stop loss? Your stop loss will be here. And where will be your take profit? Your take profit will be where? Exactly here. Are we together? So what happens when the market comes down and takes you out? It, instead of going up, it goes down like here at this point. Then it takes your your stop loss, and it goes towards your analysis. So this, what happens here, is what we call liquidity. So it's upon you to go and learn and know, when am I able to go for this liquidity? Or, I hope you're getting what I'm trying to explain to you guys. So it's upon you to go and see, where will I, a minute. So hope we are going on together very well. So I'm saying this is an uptrend. You want to buy this market. That means if you want to buy this market, you will start buying from here. Your buy limit or your entry will be here, and your take profit will be here. So the same way, if you want to sell this market, your stop loss will be here, and take profit will be where? Here. So what happens when the market comes and reverses from your analysis and it goes away? Like, it comes and pick your stop loss and it goes towards your analysis. That's how liquidity is taken. So go and do much research about liquidity, because liquidity is the key thing in the market. Are we together? Liquidity is the key thing in trading. Go and learn more about that. So let us compile market structure and liquidity. So when the market is an uptrend, if you want to buy this market, number one, if you want to buy this market, like for example, this is an uptrend, you want to buy this market. Now, how will you go about it? Number one, you need to wait for a break of structure. It's going up, so the market should come and break this structure. Hope you're together. It has broken this structure. The market has broken this structure. Are we together? It has broken this structure, and if it breaks this structure, what will you wait for? You'll wait. Whenever the market breaks structure, it wanna leave something like a fair value gap at this point. Are we together? So you will come and wait the market from this point here, at this fair value gap here, and do what? Consider buying. But we have advanced structure that I won't show you guys. That is for my mentorship students that I will teach them. We have advanced stuff that I won't tell you about that. So for now, just know this. This is an uptrend. That I've just shown you. So the market should break this structure, leave a fair value gap. So this fair value gap will be liquidity that is being taken here. For those who bought early, they will be taken out because they were buying this market. So like after breaking this point here, so these people, they were buying this market, and this market came and took their stop losses here. They never waited this market to fill this fair value gap. Are we together? They were stopped out. But in general, this market is buying. Are we together? So this guy bought this market, of which he's right. So after buying this market, the market came back to fill the fair value gap. Remember, I normally tell you guys, the market is not like a river that will just be moving from one point to another. It must come or go to ups and downs, and it comes down to the balances and it seeks liquidity. In a rebalance, fair value gap, and in a seek liquidity. So go and learn more about that. So after the market has leave a fair value gap, of which this will be our breaker block, and it has a fair value gap like that, of which is a paired A+ setup. So you can buy this market and target this high, and that's how trading is done. Are we together? So let us consider the selling market. So this is a selling market. Number one, this is a selling market. That means the market is coming from this upside towards downside. Now, what will you look in this market? Number one, you look for a break of structure, and I've taught you about the break of structure from the trend that I've just shown you guys. So if you see this, you'll wait and see a break of structure like here. It may break structure. The structure has been broken. Are we together? Here, it has been broken. So the market has left what? It has left behind the fair value gap. So you come at the fair value gap and wait for the market to come there, and use your entry confirmations and do what? Enter that market and put your stop loss where? Stop loss should be here. Here should be a stop loss. Are we together? And take profit down here. Are we together? That's how trading is done. And I've just taken exactly 15 minutes. So I'm done, guys, with what I was telling you to come for a meeting today. So if you have any question, the point is now and the class is clear. So you can ask any question that you want, and I can call it a day.